Well, thank you so much for talking to us. Let's first of all look at the last quarter. I mean, you're beating expectation, though we're seeing that the lower interest rate environment is also taking its effect on your earnings. So what's the assessment of your profitability?
Well, it has been a very good quarter again. We are now after 9 months with a net income of 1.9 billion, absolutely aligned with our expectations. And if we look forward now, we will definitely manage to show the 2.4 billion euros of net income for the full year, which is, and again, a record result, or will be a record result. And yes, I mean, NII is coming down because of the interest rate environment. However, we expected that. We have also very good measures against it by increasing the lending volume on the one side, but also, more importantly, increasing the net commission income. And that's what you have also seen in the third quarter. Net commission income has been very, very strong. And then overall, we could even increase our outlook for NII for this year from 8.1 to 8.2 billion euros.
Having said that, the environment, especially in Germany, is not very easy. We're seeing also higher loan loss provision, or risk result, as you call it. What's your outlook here, and how concerned are you about the state of the German economy and your loan book?
I mean, we have been always cautious also for this year with respect to the economic outlook, which also led to our guidance, which we did at the beginning of the year, of the less 800 million of risk result. And nothing has changed on that. We still believe it will be less than 800. And we see an increase of single cases, and that's what you also see reflected in our risk result. Out of the 255 million, approximately 130 million are just really referring to 3 single cases. You have then 70 million for the complete other portfolio, because the rest is very much due to changes in our models and collective staging, which is, I would say, untechnically speaking, also some kind of buffering we do here.
When the interest rate were on the rise, you also did that calculation that 1% more interest rate means XY% more net profit for the bank. How is it in reverse when interest rates are now bound to fall?
Well, you see automatically, clearly, the impact of the lower interest rates, at least also on the things which you have not locked in, and that's the counter effects which you have is more volumes on some parts. You see also changes in the deposit beta. You have the replication portfolios, so our model deposits, which create additional revenues year by year. So there are lots of things which are balancing out. And what is also important in our case is that we have a corresponding effect on our fair value result. So meaning when the interest rates increased, we saw a negative effect on our fair value result, and now with declining interest rates, we see a positive effect on our fair value result. So there are balancing effects.
So let me bring you to the big topic, the UniCredit potential takeover. The value proposition is clear. They promise more profitability. So what's your plan to actually match that? What transformational steps could you take?
But first of all, I think we have a very good strategy in place, which is basically also delivering, as we currently see in our results. We have just updated the numbers for 2027, where we now promise a 12% ROTE for 2027, which is basically meeting our cost of equity aspiration. So that's, I would say, already a very good progress. And in addition, we said that we would work on an upgraded strategy, and results we will present in a Capital Markets Day mid-February.
But what could you come up with, like, as a real transformation to push the value of the shares as well even higher, so that it might actually match what UniCredit could be paying in the end?
Well, at the very end, it's about shareholder value creation, right? And it's a mixture of capital return our shareholders can expect in the coming years, which we think is very attractive also when you put that in relation to our current market capitalization. And the other thing is clearly increasing our profitability and accelerating also the speed on how to achieve and when to achieve our targets. And that is something we're working on, and apparently we're also working on that very successfully.
Another strategy, it seems, is to increase the share buyback program. Is that one main pillar to actually your main pillar of your defense strategy against the takeover?
No, I mean, with the share buyback, we definitely do what we always have promised. We said very clearly for this year that we would have another share buyback program. We said that we would return for the years 2022, 23, 24, up to 3 billion euros of capital return. We have done so far 1.4. That leaves us with 1.6 for 2024. The 600 have been already announced in August. And that is basically just doing what we have promised. And also the 400, which we now have applied for, fits absolutely perfectly in the picture.
What do you think, or what do you reckon the ECB will do? I mean, as it is a inside European cross-border potential takeover, most likely they will not say no to it. Or what's your knowledge in the background?
I mean, I can't judge. I'm not the regulator, so it's up for the regulator. I think for the regulator, and they made that also very clear in interviews, it's a difference whether the authorization goes up to 30% or beyond. I think at the moment we are on this first stage, and I leave it to the regulator to decide on that.
Why, in the end, are you so much against it? Because in the end, you could form a bigger bank, which is good for Europe, and it could mean higher profitability.
First of all, we have nothing to be against because there's nothing on the table. That's very important to note. And we also always said that we would be very open to discuss. If there is something coming on the table, we will carefully review that with our own standalone strategy and see where can we create more value in the interest of our stakeholders. And stakeholders mean shareholders, customers, and employees. And that has not changed. So we will definitely be open and carefully look whatever comes.
When the first stake building took place, there was much support for your, sort of your reasoning in Berlin. That has calmed down, and with that really unstable government right now, how do you feel the backing from Berlin?
I feel very well backed because if you listen to politicians, they made it very clear that they will keep for the time being the stake, that they will also not participate in the share buyback, and that they leave it up to the management teams to decide further steps. And I feel fully supportive, and that's, I think, what counts.
Going back to your strategy, I know you'll only present that in due course, but still, is one of the defense pillars as well to cut costs even further than your predecessor?
I mean, continuous improvement and efficiency is something which is our homework every day. So we have to do that regardless of what's coming up, because we see so many things coming up, headwinds. So that is something which is a necessity. And we clearly have a lot of thinking around that, and specifically the new tools, the AI tools, will hopefully help to increase further our efficiency, and that's what we look at. Yes, it will be an important pillar of our strategy. Yeah,
more employment of AI will also mean less jobs?
Well, I mean, you know that we are anyhow sitting in a country where we have less and less resources because of the demographics. So we anyhow have the necessity to think about how to do certain jobs without resources, because otherwise we will have problems to really find the resources. So there's anyhow a necessity in there.
What are the headwinds you were referring to for the bank as well inside Germany?
Well, I mean, we are clearly following up in the moment with respect to the macroeconomic environment. Also for next year, the outlook is I would say not too good. Our own economic department in the moment assumes that GDP growth will be only 0.2%, which is basically a stagnation, and that's not very helpful. We need to have growth, we need to have innovation in Germany to really move forward. I mean, we see that our corporate clients are investing. We see that also in our numbers, but unfortunately they are not really investing in Germany, they're investing outside of Germany.
The FT goes as far as speculating whether the German business model is broken. Would you say that this is the case?
Well, I'm more a half-full person than a half-empty person, so I believe that there is lots of opportunity also for the German market, for the German business models. I think we have great business models here in Germany, But we need clearly some measures also from the government in Berlin to make sure that we can move forward, that we see the innovation, that we have also the confidence of our corporates to really invest in Germany and not go abroad.
One question on the unstable government. Would you advocate early a snap elections, so to end that political chaos in Berlin?
Well, it's not on my position to really judge that.
In the US, it looks that Trump is winning the election, so that will have huge ramifications also for Europe. What is the effect in your view?
I think we have, everybody is prepared or has been preparing for both outcomes. So therefore, there should be not really a surprise now. I think what is important now is that Europe keeps talking with the US and the president, who might very well be Mr. Trump. And I think it's really important to keep up the discussions. And I specifically hope that there will be some rational thinking around tariffs, because we all know that tariffs never are really helpful for both sides. So at the very end, they are always value destroying. But overall, we still keep also our guidance for next year untouched. So the 0.2%, which is anyhow not a lot, as said, will stay the same regardless of the outcome.